Hello trader. Support and resistance is one of the easiest but profitable trading strategy used by big boys such as hedge funds, institutional traders. Unfortunately, most retail trader doing it in a completely wrong way.
Are you yawning? Did you hear what I said?
Stop listening after you said we need a plan.
Like your plan, except it sucks, so let me do the plan, and that way it might be really good.
What exactly is it that they do?
Kick names, take ass.
Yeah, that's right.
So in this video, I'm gonna show you step by step how you can identify and draw support and resistance and a strategy that you can use to trade support and resistance like the big boys are doing every day. Now, if you are really curious about this profitable strategy, then stick till the end of this video. Now, before I begin, make sure you smash the like button, hit the subscribe button if you haven't done yet. This is Forex Wizard from Forex Trading Wizard Academy. With that being said, let's get started. Okay traders, so let's get started. First, let's find out exactly what is in fact a support and resistance, and then we'll see how retail traders draw support and resistance in incorrect way so that you can correct at the same time. And then I will show you step by step how you can find trading opportunity around this support and resistance. First of all, let's look at this zone here. As you can see, this is the zone where gold, you can see on the intraday perspective, the price came to this level, okay, to this zone. And from that zone, we have seen that the price has bounced, okay, strongly bounced. And the price came to the same zone. And then what we have seen that the past has been repeated. What we have seen, the price rejected from the same zone with a strong momentum. So what does it mean? It means that whenever the price coming to this level, to this zone, the sellers is selling this market, and as a result the price is dropping. And once the price came to the same zone, because in the past the seller has an interest in this level, the sellers again selling this market. So that means that there is a lot of supply in this area. So that supply zone is what we call a resistance zone. That means the price is facing resistance to go further. Now from that supply zone, what we have seen that the sellers again sold this market, created this big move to the downside. And the same thing happened when the price came to the same zone. Again, the sellers are selling this market and created another impulsive move. So when you see that this is happening, that is what we call a resistance or a supply zone. Simple. Now you understand what is a resistance. Now to create a resistance, you need at least 2 points. That means that at least twice the price needs to come to the same level to have a rejection. For example, even if you apply your common sense, if you want to draw a line, you need at least 2 points. Otherwise, if you want to draw a line in 1 point, you can draw that way, this way, in many ways. So with that said, you need at least, once the price bounce, you need another time the price to be bounced from the same level to define it as a resistance. Now the next thing is why most retail trader does it wrong is because we think in a linear way. It's not that you are not doing correctly, but the education inherently given in a wrong way. The first thing that you need to understand is that support and resistance is not a line. You can't define trading chart with a line, neither a trend line nor a support or resistance. We draw it only for simplicity during the analysis. But you need to keep in mind that this is a zone. There is a big advantage of understanding. I will in the progression of this video, I'll tell you what the big difference is understanding the zone and line. Now if I draw this level here, let's say I can draw it that way, that okay, this is the resistance level. It's not correct. You need to zone out which area is that resistance zone. So instead of resistance line, it will be a resistance zone. So if I draw this, then how you can correctly draw that resistance zone? The correct way to draw a resistance or support zone is, the first you need to look at the closing and opening of the candles, okay, and try to touch as many candles as possible on the opening and closing, and then you need to extend it to the highest possible wick, which will consider a resistance zone. As you can see, the way I have drawn here is with the opening and closing of the candle to the resistance top of the wick. Even you can extend to the downside. Now this is accurate resistance zone. As you can see, it's not a line, it's a big area of resistance, and whenever the price is coming in between this zone, you see that the price behave very differently than other areas, because in that zone there is a lot of sellers in that market. They are preparing to sell the market. Now let's look at how you can trade this kind of zone in the real market. Okay, so let's look at the strategy part, how you can find trading opportunity around support and resistance. Now we'll look at a couple of examples here, and then we'll look at the chart to see how exactly you can find that trading opportunity. First of all, let's assume that you found a resistance line. Okay, now as I told you, the resistance is not always a straight like that. It could be an angular level, it could be a horizontal level, based on how the market is doing. Now whatever the structure could be like that, this could be a resistance. So when you see that the price has gone to that level, bounced, has gone to that level, again bounce. Now keep in mind that the key points here is to look for an overextended market, and this is the main mistakes that most trader does, is that because in the market, more often or not, you will see a false breakout in the market. So the best way to trade this kind of level, this resistance or support, is to wait for a false breakout. A breakout happen, and then wait for the price come back to the zone, to the level, and from there you can easily sell the market with a high probability trade setup. Now it could be in terms of support. Let's say you found a support zone like that, okay, a support like this or a support like this. Let's assume that you found a support like that an angular support. The price came to that level, bounced, again has come back to the same level. You have to be patient to see how the price is reacting. The best high probability trade is wait for an overextended market. That means that the price will act as if the support is broken, and then you'll see that once you see the price has come back to the level again, created a false breakout, that is where very high probability trade setup. Now let's look at charts to see how you can find this kind of trade straight away. Okay, so let's look at this euro dollar on 15 minutes. And once you look at the chart, you'll see a lot of trades based on what I have explained so far. Now if you look at this price action here, okay, euro dollar creating a level of support and a level of resistance. If you draw this zone, what do you see? That in the past, let's draw over fully this zone that we discussed so far, euro dollar. In the past, the same level acted here. If you extend as much as you can see a clear direction in the market. What you see that this level acted here as a resistance, this is the zone, and as a support here, okay, support here, same zone, and also there is a support here. Now if you see that when the price has come back to the same level, has penetrated to the upside, and then was coming back, rejecting, coming back, rejecting, Now at some point, what you have seen, try to understand what's happening here. Every time the price creating an overextended market, look at this one here, okay, you have seen a rejection. Now the same thing here, okay, look at this doji here, which in fact paid cross the previous ones completely, and then you have seen a bounce, but not that much powerful. Which one is the most powerful? Look at this candle here, okay. This is where very high probability trade setup comes, and closely look at, you will understand exactly what I'm telling. See this bullish candle, okay, it has crossed all those candle in the past, in the recent past. All those candle created a strong level of false breakout of this support, and then aggressively bounced to the upside. And that is where you need to find a proper trading opportunity. Now if you see that there are a couple of candles created the same kind of false breakout of this support level, but this one crossed all of them, okay. And that's the patience that you need to grow, to wait for this kind of price action so that you can find the best possible trade in the market. That's the simplest strategy you'll ever find in the market. And if you trade this candle, okay, if you go long with this candle, keeping your stop loss always below the false breakout candle, you can achieve at least 1 to 4.5 risks to reward. Now if you take 1 to 3 risks to reward ratio trade, that's more than enough for you to stay profitable. Now let's look at quite a few examples so that you can use it as soon as you finish this video. Okay, so let's look at this example on GBP, JPY. Now if you want to draw this first resistance zone, you can easily draw this one here. Okay, as I told you, this is not a line. You need to look for a zone so that you understand in fact which area you should consider when you are creating a zone for resistance. Now if you draw this zone, then what you see that in the past the same level acted here as a resistance and then rejected. The price came back to the same level. Now what you have seen, if you closely look at it, you see that the price in fact created an overextended market, and then from there it has been rejected. Every time the price coming to that level, when it creates an overextended, look at this one here, when the price came to the same level, created an overextended market that is standing out from many recent candles that in the past, and then it creates a movement to the downside. And finally when it creates this one that in fact crossed all the candles in the past, let me tell you that why this doji is so powerful. As you can see, it in fact created a very strong rejection, which is very different from many other candles in this zone. This one also a rejection, but it has dropped a lot, but this doji is super powerful. You see that there is a big drop happen, and this is what the big boys are doing. This market is moving by big boys. So if you closely look at that, this candle in fact crossed all those candles that in the past and closed back even below all those candles in the past. So this is a pure rejection. When you see this kind of rejection, that is where you can see the big move happen to the downside. If you sell this market, you easily can achieve 1 to 3 risks to reward ratio without any question. So this is in fact a huge profitable trade. Now let's see more examples to understand the strategy properly. Let's look at this example on UJ, dollar yen. If you look at this level here, it's a clearly defined, you can draw this easily resistance zone with this all those candles. So if you draw this level, what you see that there is a zone here that you can consider in terms of UJ. So we see that in the same zone, when the price came back here, created this move, has broken down, okay, and same zone, whenever the price is coming to that level, we see that a rejection to the downside on dollar yen. Every time this zone is being respected. Now, whenever you saw that, try to understand, you see there is a penetration of this zone clear, and from that penetration we have seen a big drop happen. Okay, a strong drop happen. Now, if you sell this market from here with that penetration, keeping stop loss above this high, you easily can target 1 to 3 risk to reward ratio without any question. Now, if you move and then see in the future what happened, look at this. Whenever the price penetrating this resistance, creating an overextended market, the price is dropping. And the same thing is happening here. Look at this one here. When the price was creating series of lower high, this strong rejection has in fact crossed this one, crossed this narrow green doji, and also this one's high almost created an equal high with that, has a strong bounce with this long bearish engulfer, giving you a very strong probability for drop. Now, if you trade this candle as well, the short side, it's a huge profitable trade. Keeping stop loss above this high, you can easily target 1 to 3 risk to reward ratio trade. And this is how you can find the most profitable trade possible in the market. I sincerely believe that this strategy and valuable video was helpful to you. If you find value in it, give a big thumbs up and also subscribe to the channel, and also watch these 2 videos, will be really helpful for you. Thank you very much. I'll see you soon in my next video.